Hello again, everybody. It's Harry Boxer, the Technical Trader. It's Tuesday, December 22nd, and these are the charts of the day. This weekend, I promised you an update on the Boxer Shorts list, which we're going to do tonight. Although there's no urgency to be short anything at this point, a lot of these stocks definitely look negative and are dropping even in the face of a rising market. So I don't think there's that much risk even being short in this market in these stocks, and you'll see a little bit more about them and why I think that. Starting with ABAX, this is alphabetical. This is, by the way, starting with ABAX, ABAXis, you'll see that the stock was in a nice rising trend. It saw a jump from 13.5 to nearly 30. It then head and shouldered in here with a weak right shoulder, broke down, rallied back to resistance, failed, came down, made lower lows into the gap, and then has moved sideways for about the last 6-7 weeks, failing at the declining top line and the top of the channel. Beginning to roll over here. A breakdown could occur that tests the $20 level, and then perhaps secondary target at 17 and then 13.5. Those are my targets going forward on it. BIDU, which is new to the list, added today, appears to have triple topped in the 443 area after a huge rise from 100.5 back in December of last year. Yeah. But it appears tired, losing momentum. The technicals broke down here and have not recovered, while the stock made a new high. That's a definite negative divergence. The stock has then rolled over, broke down below its moving averages, and today took out its trend line, dropping 8.5 points. My targets are 365 and about the 310 area for you short side traders. CTCM had a big run this year from 237 to 20. Kind of a head and shoulders top here, broke down, snapped back to resistance, made a lower low, snapped back yesterday, but is in the confines of a declining tops line. There was some big volume on the downside on this crack that did bounce near these lows, near support, and so wasn't surprised to see this bounce, but eventually we think that's a takeout and a move down towards the 9.5 area. CTCT in a quite negative declining channel after forming a head and shoulders type top here as well, with even a broader pattern here. Snap back to the neckline and the declining tops line and moving averages, formed a bear coil and broke down, made a lower low, and yesterday bounced off the bottom of that channel and near lateral price support. So we're not surprised to see the bounce, but I feel that any further price progress up towards that 16.5 area may be an opportunity to short it, particularly if it's on low volume. The eventual breakdown gets us down to, in my opinion, to about the 12.5 level, maybe even as low as 10.5 to retest last year's lows, depending on how weak things get. CYOU, CYOU, multiple head and shoulder type top, formed a wedge, broke down hard, rallied back on 2 occasions and failed near the neckline. It's now formed a big bear wedge over the last 2.5 months, and it's still in the confines of a declining channel. As you can see, tested this channel and backed away from it in the last few days. Downside projection on the 5th wave decline, 1, 2, 3, 4, 5, gets us down towards about 25, my next trading target. EBIX, which after rising from 17.5 to 68, then broke, snapped back and failed, and now has made lower lows. It's in a declining channel at key secondary support around the 41.2 zone, bounced, but maybe an opportunity to short as it appears to be heading on negative technicals here to another area of resistance. Targets are 34 and 29.5. ESC has broken a topping formation, broke down on heavy volume, been rallying back on lower volume with really non-responsive technicals, particularly in money stream and balance of power. And looks like this one could break down from here, and if it does, I would look for something down around the 29 zone near these lows in March. Beyond that, maybe even a low all the way down back to retest 25. ESI, similarly in the same educational group, also broke down, snapped back a couple times, non-responsive technicals, and it appears that a new down channel is in place. If 85 is broken, I'm looking for something near 70 and then 63.4. FUQI, after a nice run this year, from 3 to 30, 3 to 32 actually, formed a topping pattern, broke down, rallied back, but reversed sharply, formed a 6-week or 4-week, 5-week bear flag here, and has been steadily lower over the course of the last 2 weeks, dropping from 23 to 16.80 today, down 82 cents today to a new 5-month low. Targets are 13 and 11.5. GT, after topping in this area, came down sharply, snapped back to resistance, backed off, came on again, but the overall pattern is a rising wedge, bearish pattern, that if it fails right here where it should, and starts to break down, it could fall rapidly and take us back down towards the 10, 10.5 range. HXM, forming a topping type pattern, it appears, but we'll have to see whether we get the confirmation to the downside. In any case, possibilities exist that if it breaks 30, we're going to see a move down towards the 25.6 zone and maybe lower. Illumina, ILMN, I should say, having broken a 1-year support level and then forming a bear wedge, even though it was up 79 cents today. You can see the non-responsive technicals here as well. It just appears to me that this stock wants to go lower, and I'm looking for eventually to get down towards the 2021 zone. LAD, which is lithium motors, excuse me, ran up sharply from $1.50 up towards 16.5, but head and shouldered here, broke down hard, bear flagged, made lower lows, and now it's bear flagging again. It appears that this is a $5 stock eventually. NTES appears to be potentially topping. We'll see if we get the eventual breakdown. We need a confirmation with a breakdown below the 35.5 area. That should do it, and test the 31 area pretty quickly. Secondary target 27, and then finally possibility of 24. NUVA, NUVA, despite an upgrade today and the $1.16 run up, take a look at the technicals, barely moving. I think that's non-responsive. I think that stock was only up today because of the upgrade by a brokerage firm, and that could be sucker money. We'll see. Anyway, 33 is resistance. I'm looking for the stock to roll over if it gets anywhere near that, and may eventually make it down towards the 24.5 zone. NVEC topped after a long run up. That was a beautiful trend, but that was broken decisively here. And now since then it's coiling in a bearish coil beneath the declining tops line and declining moving averages in a nice parallel channel, which eventually could see something around 28, 8.5. That's about a 10, 11 point run from here. Pool, kind of a flat head and shoulders top, sharp breakdown in October, bear flag, obvious one, failed at resistance, both at price and moving average resistance and channel top resistance. Came down, made a lower low, and now is bear flagging again. In my opinion, we get a fifth wave down that takes us down towards 15.5. PRGO, new one that we added this weekend. Here's why. It appears the head and shoulders top is forming. The neckline was broken, so was the 50-day moving average. The stock did rally back above that, but I'm not seeing any rate thrust in technicals, so we'll see if we get some kind of downside confirmation. Certainly there's some support in this zone here around 36. That would be my next trading target, and anything below that could lead to prices in the low 30s. PSYS, which has been on our list for a while, broke this head and shoulders top with a dramatic plunge from the high 20s down to the 17.5 area over a course of a week or so, and then rallied back slowly over the course of the month to get back to declining tops and moving average resistance. After filling the gap, it fell over again, bounced back up again with non-responsive technicals, and it appears that this could fail in this zone and roll over again. I'm looking for 17, eventually maybe lower. PWRD, Perfect World, also appears to be not only topping but have completed that top by breaking down today. Volume is picking up to the downside. It dropped a point today in a rising market. Not a good sign. Technicals are deteriorating rapidly, and looks like this one could reach 33.5 and then perhaps even down towards the high 20s eventually. ROST, retail stock for ROST stores, as you can see, is broke its trend line, snapped back on low volume, making a series of lower lows, but forming an overall rounding type top formation and a breakdown below the 42 area, which is not far from here. And you can see volume increasing on the downside, down 87 cents today. This one, if it breaks here, could drop sharply. My first target is somewhere around 37. Secondary targets in the 33.5 to 35 zone. SAP